If you have an operationally oriented background, if you come from finance, manufacturing, even sales, then your orientation is to run a great business. And by the way, you want to run a great business, but you tend to be more inwardly focused. You tend to be more running the business from inside the four walls of the company. But a growth company, a truly market-oriented company, and you see some of these that emerge from time to time. You know, some of the favorites are the ones that don't have profit for 10 years, even as a public company, something like Amazon, where they're so market-focused, they're so driven for growth that even their investors say, hey, that's okay, keep growing. We know profits will come later. And so there's just a difference in those behaviors. And so the notion that you could be both, that you could be operationally oriented, which is really a signal towards profitability, towards getting to efficiency and getting towards, spending the least amount of money for the greatest amount of impact, and combine that with a market orientation where you're going to meet the needs of the marketplace, where you're going to be able to pivot organically, where you don't have to acquire another company to grow. You can grow organically. You can enter new markets. You can introduce new products. And so those fundamentals are the things that just continue to ring true, and maybe more than ever.